Hello again, I'm Robert and I'm a licensed reverse mortgage specialist and loan officer and insurance agent. And this is part 8 in a video series that asked a tough question: what if I didn't save enough in retirement, or I'm not sure I saved enough? What else can I do? Let's say you really don't need all the cash that's available right now, but you want to protect yourself and your family or leave a large amount to your heirs after you pass away. Let's look at life insurance first. There are different types of life insurance. Maybe the borrower has term insurance or a whole life policy. They both have their pros and cons, but I'm not here to sell you insurance, so let's just keep this simple. The purpose of insurance isn't necessarily to have the lowest premiums, but to have the right coverage when something goes wrong. The truth about term life insurance is that only about 2% of those policies are paid out because most people outlive the term. The term product is great when you're in middle age because you're working, you have a family, you have people who rely on your income. So if something happens to you, that's a great policy to have. It's inexpensive and it replaces a lot of lost income. Another issue with the term life policy is that they have no cash value. You would have to sell the whole policy to get any cash, whereas with a whole life policy, you could have a cash out and still have insurance left over. Maybe you still want a term policy, but in your 70s and 80s, they become very, very expensive. And by the way, when you get into your 80s, most insurance companies will start not covering you. So the issue with insurance is the monthly premiums. They can get very expensive as you get older, but even if you have level monthly premiums, all the other expenses in retirement are increasing. So you could tap into your reverse mortgage line of credit to help pay those monthly premiums, keep the policy from lapsing, and keep it in force your whole entire life. You may even be able to increase the amount of coverage you have because you have the money to do that from the line of credit. By increasing the coverage, you're providing your beneficiaries more tax-free money when you pass. Now let's say you have a whole life or universal insurance policy. Again, you could use the line of credit proceeds to keep that policy in place. You could increase your coverage, you could increase the cash value you could borrow against, or even purchase a new policy if you don't have one right now. By doing this, again, you leave your heirs with more cash and proceeds upon your death. And with these policies, you build up a cash value. So you could potentially borrow even more money tax-free than what's available in your reverse mortgage line of credit, because now you have that alternative source from your insurance policy. Many of the permanent whole life policies also have options of having income and long-term care riders. So you could possibly set up another income stream to help pay for home care and other home costs. The other benefit of the insurance policy is that they help with estate planning. So they'll leave money to your heirs in case you have any outstanding debt or they need to help pay taxes. Like and share this video with anyone you think would benefit from this information. Thank you very much.